Hello and welcome to another edition of the Forex Technical Market Update. This is Beyond Dale, and I hope you had a wonderful weekend. Whatever you did with your weekend, if you had the luxury to relax, well, I hope it was very relaxing. And if you had to work, sometimes that's how life is, and we just have to do what we have to do. And speaking about doing what we have to do is that if you I can tell you that if you want to be consistently profitable in these markets, you have to look at these opportunities that occur in the markets every day. You have to do your chart analysis every day. And what I would recommend is that 10 minutes out of the day, 15 minutes out of the day, if you're at work or if you're at home, just look at the charts. Uh, Take off all the indicators. Look at the price action to see what is happening in the markets. Write down where are the prevailing trends and what the market is doing, and you'll find that your analysis skills will improve, and eventually your trading confidence will improve. Remember, folks folks normally don't get good at something just by doing it once. It's often repetition. Any professional sport athlete repeats and trains and trains and trains over and over and over, and really thinks about the stuff. Because one of the things that folks say is that you're just born with a skill to trade, and my answer is no. I blew numerous trading accounts before I started to see some level of profitability in the markets. So it's not something that I was just born with. It happened over time and by just putting in the work necessary. Okay, now in front of us we have a chart of the euro, and the euro is currently still trading below critical resistance, and the market has to eclipse this resistance level at this 115.38. 115.38, the market has to close above this level for the bulls to gain more confidence in this rally. If the market does not close above this level, this 115.38 level, we're at a risk of selling off, and the sell off could be fairly strong, taking into account of this large downtrend in the market. This sell off could be fairly strong, and the 104 area of support could be vulnerable if the market does not trade above this 115.38 level. So that's what we're looking out for in the euro. Taking a look at the pivot point numbers, we see the market last week not closed, but the high that was printed on the market was 114.66, and the actual monthly resistance, R1 resistance level, is at 114.78. So these pivot point levels can project the future areas of support and resistance. And keep in mind that the weekly R1 number for this week is 115.62. The monthly R1 number is 114.78, and the resistance high is at 115.38. So what this projects is that we have a confluence of resistance areas between 114.78 and up to, I would say, or even up to 116. So you could have sellers lined up in this area to sell this currency based on pivot point analysis. Now, this, if the market is able to close above this area, that will then show to me that the market, the bulls have a lot of control of the market, and the buying pressure is just way too strong for the sellers, and that will prove to me that the bulls are in control. And remember, a lot of trading it's not so much about predicting what will happen next. It's more about letting the market show you where the opportunities are, and you just hop aboard the opportunities as they present themselves. Okay, so that's interesting in the euro currency. Taking a look at the Canadian dollar versus the USD, we spoke about this triangular consolidation last week, and the market has broken out to the upside. Resistance is at this swing high here at 121.63, and the market is trading just below that resistance area. Let me just draw that line here, and another resistance is at 122.10. So those are the two major resistance areas. Support should come in and around this broken trend line. So anywhere from 120.80 down to, sometimes the market trades below it slightly, down to 120.60, 120.50 or so. That should act as strong support in the Canadian dollar. Taking a look at the weekly numbers, we see that we're trading slightly above the weekly R1 with the Canadian dollar. Okay, another market, and that's why sometimes it's good to look at the major currency cross and then look at where you could take advantage of this weakness in the Canadian dollar. And a market that is promising is this British pound Canadian dollar. If any of you have attended the webinars or taken the course, you could see that this is a textbook trade here. We had a pullback into the 618 retracement level, and the market is currently rallying. This is a British pound Canadian dollar currency pair. We see that we are in an uptrend. We had a pullback, and the market is now rallying on the daily charts. So that's a textbook trade. Now, for our portfolio that we're trading on behalf of our members, we're currently not long this market. And the only reason why we're not long is because we're already long the British pound Australian dollar, and we're long the British pound Japanese yen. These trades are working out well for us. But what we don't want to do is overexpose ourselves to just the British pound. So if we're long those two crosses already, you're over leveraging yourself to then add another British pound position on. And that's all. This comes with proper risk management and proper money management, which is vital if you are going to trade and manage your portfolio. Because while you may not be managing other folks' portfolio, if you're managing your own portfolio, it's a portfolio, and you need to have proper portfolio management principles in. Trading is not just about taking every trade that comes your way. It's portfolio management, how you manage portfolios, and that is an aspect of trading that's often overlooked, but is extremely important to your success as a trader. Okay, another market of interest is the XAU, which is cash gold, and we see that the market closed above that channel we were speaking about last week. If the market fails, because it closes above it, that doesn't mean the market cannot come right back into the channel and head back down. That would be a false break. Remember, these markets can do anything. So if that happens, that would be very bearish for gold, and we could see a challenge of the 1,140 level. If the market rally continues to occur, the critical resistance is up at the 1310, 1320 level in the gold market. So this is a market I'm very on the lookout for because seasonally, gold tends to rally in the June-July period. And if we're going to see bullish action like this, it 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 puts this market on my radar for a longer term position trade. Okay, let me just take a broader look at the US dollar index. And as you can see, the market is bouncing at critical support. Critical support is at the 93. Actual price is 93.25, and the market is bouncing off of that 93.25 level. So the 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 US dollar bulls have confidence above 93.25. If we're to close below 93.25, that would signal to me that the US dollar is in for a larger pullback and a correction of this massive move up that we saw late last year into early this year. Okay, so remember, if you want to have these trading signals sent directly to your account, you can click on the link below to sign up to have the trades copied directly into your account. Because here at Aces Trading, that's our main activity. Our main activity is trading and managing portfolios and sending signals to accounts. Because I know there are a lot of folks out there that offer a lot of courses, and you never ever get to see, okay, how is their trading system performing? How are they doing on behalf of clients? And there's nothing wrong with selling courses, because we have courses here also. But sometimes you want to see the methods being implemented and not just back-tested implementation. You want to see how it's actually working in the market currently. And this is our main activity here at Aces Trading, is to allow you, if you currently don't have the time to trade, or you are just not as confident in your own trading, to just piggyback off of our trades. The trades are sent to your account, and you can see how the trades are doing. And you can start with as little as $1,000, $5,000, $10,000, whatever you want to start with in your trading account, and see how it works. Because what this is an investment, and too often folks don't spend time on investments, things that can actually make them money in the future. So if you want to have these signals sent to your account and you're frustrated with the Forex market, this is an outlet where you can see that the system that we're employing actually works. Okay, thank you very much for listening, and I hope you have a very good trading week. Thanks.